Hi, I'm Joaquin Gutierrez, and welcome to the briefing room, part of the JGRS system that includes AOS and BOS. If you want to learn more about that, visit jgres.com. Let's talk. So today, you're hearing a lot of information about um, foreclosures, and you have there's always two parties. You have the people that are doomsayers and saying that the end of the world is here. They were going back to 2008, and then you have the people that are saying there's nothing to see here. There is something to see here. So you have two things that you need to look at here. And today I'm going to talk about FHA loans and VA loans that were done in the past. So in June of 2026, very recently, VA released a new loss mitigation waterfall, the replacement process for handling defaulted VA loans. So at one point, and by the way, that has to take effect by November. If if at one point you had a VA loan and you were falling behind, and I don't know if you've ever had somebody in that situation, or you yourself was in that situation. What they would do is take the debt that you had fallen behind, and they would pack it up and put it at the end of your loan, which is terrible for some people that forget, because when they go to their closing and they call for a payoff, the payoff usually doesn't bring up that lump sum that's still out there. So you have people getting to the closing table and the bank adds that lump sum, and all of a sudden they thought they were going to take home, $70,000, and it's actually 20, or they might still owe money, or they were just um, they're getting a lot less than they expected. So that happens very frequently. So with VA though, and VA veterans should get everything that they deserve, all the benefits they have. At one point, when loans were in the 2, 3, 4 percentile percent level, if they had that loan and 5 years later, now we're at 6.7, I believe is what's going on right now. You would not be refinanced at 6.7. You would be refinanced at a lower rate so that you can continue to try to catch up and pay your mortgages. That is gone. That safety is gone. Now, let's talk about FHA. FHA loans had an issue also after COVID. People were falling into debt, falling behind, and they were having the same thing done. They were having their loans, whatever their debt was being stacked and added to the end of the loan, and they were being refinanced. And then if they fell back again, they were allowed to do this again. That's been taken away. So you have both of these things happening at the same time, pretty close, relevant in our time frame. So you have a surge of properties that should have gone into foreclosure years ago that have been, people have been kicking the can down the road, and now they don't have the policies that they were using in the past to stay in their property. They may still have equity, but remember when they bought, they didn't have equity. They bought with 3.5% down if it's FHA, and with VA, they didn't have to put any money down. And then they were stacking all this debt. So hopefully for most of these people, the price increases that we've seen here in South Florida, in Florida in general, will make up for that, and they'll still be able to sell their house and walk away with some money. However, now they have no longer an opportunity to stay in the house, catch up, unless things have gotten much better and they can prove that. For a VA, if they do the refinance, it's now going to be, if they couldn't afford it at, let's say, 4% interest, now they're going to be forced to refinance with the 6.7 or whatever the rate is for them. If they couldn't afford 4%, they're definitely not going to be able to afford a higher interest rate. So you're going to start seeing a lot of foreclosures. And for those of you who are members of the brokerage operating system, um, the link is in my bio if you're on Instagram. If not, just go to brokerageoperatingsystem.com, and you will see that I put together how to find properties that are VA, FHA, that are distressed, so that you can prospect them and be gentle. These people are stressed out. But I've always told agents that work with me, Especially the ones that are very shy about pulling the trigger and talking to people. You know who you are. You know you're a good person. You know that you're going to try to help these people. If you don't contact them, somebody else will that might not be as nice as you are. So get out there, help these people. At least, consult them. Hopefully they will have equity and they'll be able to move on and do something else. So that is in Florida. I believe we have, let me see, let me take a look at my notes. Yeah, so you have 29% of loans originated in 2022 had a front-end debt-to-income ratio of 50% plus at origination, meaning borrowers had almost no cushion built in from day one, and that's something that I had discussed already. So early 2026 FHA delinquency hit 11.9%, and these are national numbers, but they're out there. So now you know that there is something to be worried about, and we're looking at. I believe that South Florida is one of the only places where we have a deficit in properties as far as inventory. Most of the state has an excess of inventory, so we're in for a fun ride. I'm not going to say it's a rough ride. So that's my message for today. FHA, VA, things have changed for them. For people that are already in FHA and VA loans, if you sold somebody a home with FHA or VA, pay a visit, give them a call, find out how they're doing. Let them know how they're going to be able to. Remember, it's better when you're in a distressed situation to start working on things before you're forced to start working on things. So the message today is, yes, there is difficulty, but yes, there is opportunity for the customers and for yourself. So visit the site, learn how to use Remind. Yes, it's Remind to find these opportunities. It's already up. Thank you for joining me today and watching this video. See you next Tuesday.